Welcome back. Today we are looking at a series of urgent fiscal and energy measures aimed at stabilizing the Korean economy amidst a prolonged Middle East conflict. The top story today is the government's aggressive move to cushion the blow of rising energy costs. The Ministry of Planning and Budget has officially approved a 26.2 trillion won supplementary budget. What is notable here is the funding strategy. The government is utilizing 25.2 trillion won in excess tax revenue, stemming from a strong semiconductor rebound and a bullish stock market, alongside 1 trillion won in surplus funds. This allows for a significant fiscal injection without the need to issue any additional national bonds. A major pillar of this war supplementary budget is the High Oil Price Relief Fund. The government has announced that the bottom 70% of income earners, approximately 35.82 million people, will receive direct payments ranging from 100,000 to 600,000 won. Basic livelihood recipients, 2.85 million people, are set to receive between 550,000 and 600,000 won. Lower income and single-parent households, 360,000 people, will receive 450,000 to 500,000 won. The remaining 32.56 million people in the eligible bracket will receive between 100,000 and 250,000 won. Furthermore, the K-Pass public transit refund rate will be temporarily boosted by up to 30 percentage points to alleviate commuting costs. During the cabinet meeting, President Lee Jae-myung emphasized that emergency lights have turned on for the global economy, noting that he is prepared to invoke emergency financial orders if the situation escalates. On the energy security front, the government is preparing to upgrade the resource security crisis warning from caution to alert. This transition will likely bring a mandatory 2-day vehicle rotation system for the public sector as early as next week. To stabilize supply, the Ministry of Trade, Industry, and Energy is implementing a 2-month Strategic Petroleum Reserve Swap program. This mechanism allows companies that have secured overseas crude to immediately swap it for domestic reserves, bypassing the usual shipping lead times. The ministry expects this to inject over 20 million barrels into the market by the end of May. In the financial markets, the $1 exchange rate has breached the 1,500 won mark, reaching its highest level since the 2009 financial crisis. In response, a new framework involving the Ministry of Finance, the Bank of Korea, and the National Pension Service, NPS, is discussing a plan to raise the NPS's strategic currency hedging ratio from 10% to 15%. Including its 5% tactical hedging limit, the NPS could potentially hedge up to 20% of its overseas assets. This move would effectively supply tens of billions of dollars to the market to support the won, though the NPS remains cautious about using retirement funds for market intervention. Finally, we look at a growing gap in the biotech sector. Data from the Chinese National Medical Products Administration shows that China's biotech technology exports surged 73% year-over-year in the first quarter, reaching a record $60 billion. Conversely, Korean biotech exports fell to $936.7 million, the lowest in 5 years and roughly half of last year's first quarter figures. The export gap between the two nations has expanded from 20 times last year to 64 times in just 1 year, prompting calls from the Korea Biotechnology Industry Organization for urgent government support to prevent a stigma effect on domestic ventures. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.